It's Thursday, December the 15th, which means you're about to run out of weekends before Christmas.
We have, next Thursday is the Thursday before Christmas.
Yes.
So, and Christmas is a Sunday this year.
Correct.
So it'll be Thursday, then it'll be Friday.
So you got 2 weekends until Christmas.
And then Saturday, Christmas Eve, then would be.
You're running out.
It's getting there. Are you ready? Would be the fun question to ask.
Fortunately, I am, which is a good thing. But that's not why people are tuning in right now. I guess you're tuning in to kind of get a feel for what we're seeing for next year. And we had a wonderful meeting with Phil Orlando. A lot of you folks who are tuning in to this have either been to an event with Phil Orlando, been on the phone with Phil Orlando at an event, and know that he's been really a big part of our organization for a number of years in helping us, making sure that we're on the right track and doing things. And I'll let you kind of go through some of the bullet points, but I think what he said to us sounds like you guys are on the right track.
It's interesting. If you had to ask us our history with Phil and how Phil is, Phil, he even is now, but he has always been a glass half full kind of person with us. He's always been optimistic with us. He still remains 2023 half full, but there is a much more of a caution coming from Phil these days than we've seen in the past. And it is in comparison to what you can hear in the marketplace and some of these folks that are just saying, hey, the Fed has it wrong, the stock market has it right, let's go head down and stock market up. He doesn't share that opinion, and he's sharing with us that we're on the right track, but caution is the word for 2020.
Yeah, and that's really been where we've been really all of 2022, because we started making early changes in January of this year, especially in our bond portions of the portfolio. And really, we don't see many changes coming in the first 3 to 6 months of 2023. We're gonna wait because really the prognostications we're getting in our own when we do our formulas shows that the market right now is probably at a high point for 2023, that we could see an erosion on the S&P of another 300 to 600 points on the downward side, just because earnings are going to be retracted and being reduced. So I think that we got to be very cautious. There will be an opportunity, but it's going to be first or second quarter of 23 for us to start buying back in, especially with dividend-oriented assets.
I think one of the really positive things that we came out of this on the phone call also was their lead bond manager. And he was talking about, and we've talked with you about that ultimately at some point in time, when interest rates roll over and the Fed begins to reduce interest rates, that in a bond fund, you would have opportunity for not only a yield, but a capital pickup. And we had a long discussion about that, and we recognize that's out there, but we described to him, this is the bond fund manager, exactly where we positioned your money at this point in time. And his words were us almost to verbatim, y'all have done it right. You're in a very enviable position, short-term ladders, good returns, get to March, see what's available, and then make decisions from that point on. So that made us feel good. And then the other thing that I heard this morning, not related to Phil's discussion, but I think it ties into Phil. In all likelihood, the broad equity indexes next year will not be the places to put money.
No, it's going to be specific. It's going to be specific. We'll be using either drilling down deep with using exchange traded funds or selecting with individual securities, as we have in the past. And as we've said before, we've identified those companies in our first round. They could change just because their earnings could change, but we have a good idea of the direction. and with whom we're going to be starting back with.
Yesterday, the Federal Reserve increased the interest rates by 50 basis points. We're going to let that settle into the system. On Monday, Jess is bringing to us a cash list within our clients, and we'll make decisions whether what the new rates are and if there's enough cash in there that would warrant another 3-month and carry us into early
We
January.
have a big lot that's coming due in February, I know.
Yes,
And
yes.
so I know we'll be looking to be purchasing again in February, assuming that everything remains status quo.
So, steady as you go. We're weathering the storm. The equity pieces that we have are participating, and we feel good about our defensive positions. So let's go into the holidays and enjoy family and one another and Christmas and the meaning of Christmas and for our Jewish friends, Hanukkah coming up. We wish you all happy holidays. We do this because you're so important to us, but it is your money.
And your money matters.
See you next week.